This is the video for practical example 2 of chapter 10, where we have to prepare the post-adjustment trial balance after doing the adjusting journal entries in practical example 1. In order to prepare the post-adjustment trial balance, you need to go and have a look at your pre-adjustment trial balance here on the left-hand side. These are the accounts that will also be included in your post-adjustment trial balance, but remember, in our journal entries, we created new accounts. They also have to be included in the post-adjustment trial balance. As you can see, the capital, drawings, land and buildings, furniture, no adjustments were done there, including the vehicles at cost. No adjustments were done there, so those balances are carried over as they appear in the pre-adjustment trial balance. Accumulated depreciation on furniture. Remember, we wrote off depreciation for the year. So we start off with that pre-adjustment amount of 7,000 Rand, and then you need to go and add the depreciation for the year. We go and have a look at that journal entry. There you see furniture. We credit accumulated depreciation with 1,000 Rand, so we need to add that 1,000 Rand to the 7,000 Rand. So then our closing or post-adjustment balance for accumulated depreciation is 8,000 Rand. The same with accumulated depreciation for vehicles. On the left hand side, you can see that our pre-adjustment balance is 5,000, but we wrote off depreciation in our adjustment journal entries. A further 1,500 Rand, we need to add that to the 5,000. The pre-adjustment amount of 5,000 plus the adjusting journal entry of 1,500, that gives us a post-adjustment balance of 6,500 Rand. Remember, the inventory, we took out, on the left hand side, we took out the opening inventory with our very first journal entry. We credited inventory, debited cost of sales, and then the next journal entry that we did, where we debited inventory with the closing inventory amount and we credited cost of sales. So the inventory balance is no longer 14,000. We credited inventory with that 14,000, but then we debited inventory again with the 12,000. So that is the balance of the inventory account. Then the rest of the income and expense accounts, cost of sales, purchases, purchases returns, sales returns, freight on purchases, all those amounts are carried over as is because there were no adjustments that affect those accounts. So you just transfer those balances as they appear in the pre-adjustment trial balance. However, when we get to the next expense accounts, we have then rent income where there was an adjustment. Remember, we received rent for 13 months. We had to take 1 month's rent out. So our pre-adjustment amount was 3,900. We had to debit the rent income account with the 300 Rand, so that reduced it in order to get to the 3,600, which is 12 months rent, which is the income for the current year. In the next one, salaries and wages. Once again, you always start off with a pre-adjustment balance, but then you go and have a look at what happened in that adjustment journal entry. Here you can see we debited salaries and wages, so we increased the salaries and wages expense. So you add that 500 Rand to the pre-adjustment amount, and then you get your new balance of 6,000 Rand. Same thing with commission received. You start off with the pre-adjustment balance of 500 Rand. Here on the left you can see in the credit column 500 Rand. Go to your journal entries, have a look. There we see that we credited commission received, so we increased our income account. Remember, there was short, it was still outstanding, so we need to add that 40 Rand to the 500 Rand. So our new balance is the actual income for the year, which is at 45 Rand per month times 12 months, credit balance of 540 Rand. Same thing with water and electricity. Start off with the pre-adjustment amount of 500 Rand. Go and have a look at your adjusting journal entries, what happened to water and electricity. There you can see we credited the water and electricity expense account, so we reduced the expense. They told us there was an overpayment. You therefore need to deduct that 50 Rand in order to get to the proper expense for the current year, which is 450 Rand. Depreciation, as you can remember, We've already done the accumulated depreciation side of the entry. Now we get to the depreciation one. And if you have a look on the left-hand side, there's no depreciation account here. So we need to add it to the post-adjustment trial balance because we have a journal entry that tells us debit depreciation with 2,500 Rand. So add that account to the post-adjustment trial balance, and there it is, debit depreciation with 2,500 Rand. Then we have our doubtful debts, or actually credit losses account, which is the new name for it. We have a credit losses account. As you can see in the debit column, 40 Rand. If you have a look at the pre-adjustment trial balance, there is no credit losses account. There's an allowance for credit losses, but this is the liability. The credit losses is the expense. So there's no credit loss expense account, but we did create it with our journal entry. There it is. We debited credit losses with 40 Rand. That means that it is an expense, and because we debited, we must put it in the debit column. There was no adjustment for bank, so that balance just gets carried over from the pre-adjustment trial balance. And then we have our debtors control account. Remember, we did write off 100 Rand, so you start off with that pre-adjustment amount of 29. Go and look at your journal entry, see what affects debtors control. Here we see that there's 100 Rand in the credit column against debtors control, which means we reduce the balance of debtors control. So deduct the 100 Rand, and our new balance for debtors is 2,800 Rand. And we also calculated this for the journal entry that we did when we adjusted our allowance for credit losses. That is then the next one. And then I just want to correct this name. It should be credit losses. So our next account is allowance for credit losses. And remember, on the left-hand side, there's our allowance for credit losses of 200 Rand. In our journal entry, we saw that our allowance should be 140 Rand. And what we did was we adjusted our allowance in order for it to be 140 Rand. And the way that we did that was we took the 200 Rand balance, we wrote off 100 Rand. Remember, there we debited allowance with 100 Rand, so our balance at that stage was 100 Rand. And then we credited allowance with 40 Rand. 100 plus 40 gives us our new balance of 140 Rand. The allowance, therefore, is either the outstanding debtors times 5%, or you could have calculated by taking the original balance minus the amount we wrote off, plus the amount that we had to increase the allowance with, and that would also give you the 140 Rand. Next one is creditors control. There was no change to creditors control, so you just carry that pre-adjustment balance over, and then we get our other new accounts that we have to add to the trial balance, and that is our income received in advance, our accrued expense, our prepaid expense, and our accrued income. There was a rent received in advance account, salaries and wages accrued, water and electricity paid in advance, and commission receivable or commission accrued. And if you want to go and have a look at, must I put it in the debit or credit column, go back to your journal entry. Here we see rent received in advance must be credited. So that 300 Rand we must put in the credit column. Salaries and wages accrued, we must also put in the credit column. Water and electricity paid in advance, we must put in the debit column. Commission receivable, we must put in the debit column. There is our rent received in the credit column and our salaries and wages accrued in the credit column. And there's our water and electricity paid in advance and commission receivable, both in the debit column. Have a look then at what does the journal entry say, especially when you need to create new accounts when you do adjusting journal entries. And whatever your journal entry says to do to that account, whether to debit it or credit it, that will then determine in which column it will be in the trial balance. If you go and add up your debit column, all the amounts in your debit column, all the amounts in your credit column, you will see that your trial balance balances.